Hey everybody, it is Brian Shannon from AlphaTrends.net. Hope you didn't get hurt this week in the market. The headlines are that we have now down 9 days in a row, but the S&P only lost 1.8% this week, and still holding on to a year-to-date gain of 2.3%, not including dividends. The semiconductors lost a little ground. They're still up close to 25%. Oil really got hit hard, close to more than 9% here, and the interest rate sensitive real estate index, the IYR, got hit while bonds were up. So let's take a look at the action here on the chart and make some sense of it. We'll start off with the daily chart of the S&P 500. And as we know, we've been very cautious about this market because, one, we've been below this volume weighted average price since Brexit. I've been talking about that one for a while. And the fact that we have also been below a declining 50-day moving average that had been offering resistance to this market. So when we broke support earlier on this week, it was a continuation lower, and that we saw from there. And it's been a pattern of lower highs and lower lows. There's no reason to trust a rally attempt with a declining 5-day moving average, and that's something that people learned once again today, as we had seen, that the market was showing a decent little rally here early on, holding above the volume weighted average price for the session. But when it broke support over here and that volume weighted average price, it was lower highs and lower lows right into the close. So going into next week, of course, we've got the election, and we're right on the 200-day moving average right now. The volume weighted average price from the low is down here as well. So this is, supposed to be an area. It should be a level of support potentially, but right now, again, there is zero evidence that we are actually finding some support. No matter what scenario you're prepared for next week, I think you can expect that it's going to be a difficult week for trading with the election and all the volatility that's most likely to be around that. So know your time frame, and I wouldn't be putting on longer term positions, but it's more of a traders type market in here right now. So S&P, let's see if it can hold this 200-day moving average and the volume weighted average price. Otherwise, the other level I would say has the potential to be tested would be the year-to-date volume weighted average price. So from this point, and that brings us down close to 205, there's just no evidence that there is actual support right now. We have potential levels of support, but lower highs and lower lows, below a declining 5-day moving average, we're still guilty till proven innocent with the S&P 500. And for the NASDAQ as well, we spoke about the possibility that this was going to be from a failed move, could potentially come a fast move lower, and that's exactly what we've had as support levels have been broken. And the thing that's kept us from buying is the fact that we were in potential levels of support, but as we broke this near-term level, and then we've seen lower highs and lower lows below that declining 5-day moving average, it tells us there was no point being a buyer unless you're looking for very short-term scalps. The pattern remains true. That is that we have lower highs and lower lows in this NASDAQ. We did undercut this prior low just by a few pennies, and a lot of times when that happens, we do see a reversal. Obviously, it looked like maybe that was going to be the case here in the morning, but there's no sign of any follow through, as the market couldn't hold above that volume weighted average price or the 5-day moving average. The Russell 2000 did come down to close to that 200-day moving average, and we have a volume weighted average price from the low that's just a little bit below us as well. But it came down, and today showed a little bit of strength, but I would hardly be encouraged by that strength as we remain in a solid downtrend here. And of course, again, when we look at the intraday time frame, we still have lower highs and lower lows and a declining 5-day moving average. So there is no evidence that the buyers are in fact gaining control. If the buyers are going to regain control and hold on to it, we need to see something like this, and then have that 5-day moving average flatten out, and then see a pattern of higher highs and higher lows above it. If that's the case, then we have to look at what are the potential levels of resistance, and that would, of course, be prior support areas. But for right now, heading into next week, it remains guilty till proven innocent in a downtrend. Semiconductors closed below their 50-day moving average for the first time since late June. And although this market is still up for the year, of course, we are below a declining 10 and 20-day moving average. We're below an advancing 50-day moving average. But most importantly, from an intermediate term perspective that tells us not to buy, is that we broke support over here and are making a pattern of lower highs and lower lows. So this group, I think, is to be avoided. I think that if you look at where we have come from and where we have the potential to go, this is our potential band of support. So if you're going to sell short in here, you have to run the risk that you get a quick move lower that then reverses back up, and then the better short would come after being trapped underneath the 50-day moving average. So from a risk reward standpoint, breaking below this level here after already declining, over the last 6-7 days, it doesn't look for a good risk reward. Biotech's gained a little bit back today, but again, they are still the worst group out there, and well below the year-to-date volume-weighted average price. We're below the declining 10, 20, and 40-week moving averages, and we're coming into what has been support in here, but there's no reason to think it will become support once again. It's a potential area, but this week we saw, the same thing as the other markets, that we broke down through support. We had this high last week, but with a declining 5-day moving average told us not to trust it, and then we resumed the downtrend with a pattern of lower highs and lower lows. Now, if we get back above here, this might be the higher low, but again, the momentum is so strong to the downside, I just don't think it makes any sense to be a buyer. If you are going to be a buyer, it's a high risk counter trend trade, and my opinion on those trades is, one, they're typically unsuccessful, and two, if you're going to try them, you should do so with smaller share size than normal, because to compensate for the additional risk. The shares of Apple have broken, their 50-day moving average as well. From the earlier in the year low, we've got the volume weighted average price down there. From the June low, we're coming into that, and you can see that this June low, the volume weighted average price from this low has been important since that rally, as it found buyers there once, twice, and then potentially will we see them emerge once again? I don't know. I'm not here to make predictions, but I look at the intermediate term time frame, and we still have a stock with lower highs and lower lows below a declining 5-day moving average. So to me, the odds simply don't make sense yet. If you look at what the steel stocks are showing some relative strength. We got involved in this AK Steel today, but there's a lot of damage out there. Amazon's been hit hard lately. You look at Amgen, leading biotech stock. This one just breaking down super hard with no bounce at all. And people look at this as the blue chip of the biotechs, but it's still got downward momentum, and there's no such thing as down too much if there's still sellers out there. American Express still setting up for a potential move higher, but again, it's still below that declining 5-day moving average. There's no reason to own a stock just because it's holding up better than the rest of the market. You want to wait for not just relative strength, but actual strength. And even Facebook got hit this week. So, right now we're in some profit-taking mode. We've got a heightened sense of uncertainty with the election coming up, and it's probably best to keep a bunch of powder dry for easier trades that emerge after all this uncertainty is out of the way.